And joining us for a look at the equity scene is Muhammed Wagley from Sasfin Wealth. Thank you so much for your time, Muhammed. Quite interesting moves that we are seeing there on the markets. It's usually the JSE that is downbeat and with the other markets in the green, but it's actually the opposite today. What's pulling up the JSE and what's pulling down all the markets in the US and Europe?
Well, look, 2 days in a row, I am not complaining, I've got to say.
Yeah.
I think really what we've been seeing driving the market, couple of things. In my mind, the main one that we're seeing is the positive earnings that we're seeing out of the US. And we're seeing it pretty much across the board. You mentioned about a quarter of the companies have reported, and about 80% of them have beat expectations, which is quite substantial. Paints a picture of an economy that is perhaps a bit more robust than we had priced in, and seeing a lot more growth than we really thought they would. So I think on that sense, we're seeing a bit of appetite for sort of emerging market exposure and I guess risk sentiment in general. And I think that's been a bit of a boon for us. In terms of what's been putting down the S&P 500, it's a bit challenging because I think these numbers are good, but they're always the earning numbers are good, but they're always looked at within the context of what Mr. Powell is going to do with the rates, and I think we're still very much, you mentioned this earlier, we're still very much looking ahead to Friday's PCE numbers, because despite the good earning numbers, if that data doesn't come in sort of as expected, I think we won't see a change. The Fed has been very consistent with that narrative. They will be data driven, and I don't think that's going to change on the back of good Q1 numbers if those inflation numbers aren't ticking down.
Yeah, we'll talk about appetite and on earnings. Tesla, that's something that market watchers have been watching for quite a long time, because that share price has just been sliding. And we did see investors having some appetite for the stock. It was up about 13% after releasing its earnings, even though they did surprise to the downside. But I'm not sure if the upside that we saw today was anything significant, considering to the pressure that we have seen in the stock so far this year. What did you make of those numbers, but also really the investor reaction?
Yeah, absolutely. The investors love Tesla. You can't skip a day without hearing what Mr. Musk has said. But really what we're seeing within relation to the actual share is there's a lot of sort of weakness in the electric vehicle market. And that's putting quite a bit of pressure on the share. In my view, it's very much a technology company. And, a lot of the time the EV sort of malaise can be overstated. But really, on the back of their results, which in my mind really were quite poor, they actually weren't as bad as we were expecting, given that context of weak EV. Another thing I've got to mention is the guidance was also quite positive, in the sense they came out and mentioned that, by 2025, we may have a more affordable electric vehicle hit market. And I think that's really where we're seeing quite a bit of positivity. And again, the results were not great, but I suppose they were just not as bad as others expected. And we've seen a bit of a visceral reaction in the share price this evening, or rather this morning in the States.
It's really been quite interesting, because I think there's so much focus being put on prices here. For example, it's like a race to the bottom when it comes to these EV makers in terms of, cutting their prices. But now also Tesla saying that they're going to be producing more affordable EVs, really just pointing to the consumer and what the consumer has appetite for at this point. Let's talk about, come back home to the JSE and talk about Quilter, and released a trading statement there for the fourth quarter, saying that group assets under management and administration had an increase there of 5%, seeming that they benefited more from the improved equity market rather than the bond market. So the market did like that update. We did see the share surging over 4%. What are you making of the company and just its positioning right now with everything that's happening in the markets?
Absolutely. So, probably the big news on the day, I would say, was Quilter's trading statement that they released. And needless to say, you covered it well. The market really did like it. Hang on, just one thing probably I mentioned on my book. The book is very, on my end, the book is very much sort of rand hedge, and they do actually benefit in that sense. They also saw better than expected flows, and given sort of the context of the current South African environment, I think this painted a picture of a company that has positioned itself very nicely. And the market really did like that and reacted quite well. As you said, it was up about 4%, one of the better performers on the day.
Yeah, all right. We're talking about positioning, because you have cigarette maker BAT positioning itself kind of diversifying from the traditional cigarettes to these new categories. Of course, we did have an update with the chair giving an address at the AGM for 2024 there for BAT, basically giving a summary of the financial metrics, but also, where they are in terms of their targets and profitability for the new categories there. I'm just wondering, has BAT performed, satisfactory to what investors have been hoping for?
Look, it was definitely a challenging year last year. One mustn't though forget that 2022 actually was pretty decent for them. They pay quite an attractive dividend, but ultimately, there are structural issues when it comes to smoking cigarettes and tobacco. The trends are very much against them, and within that context, they've got to try to pivot and basically, number one, accommodate the shareholder, accommodate their clients. To this extent, they've moved towards things like IQOS and things like that, and really heat not burn cigarettes, forgive me rather. But what we're seeing here, and the big challenge here is, I think from a regulatory perspective, the vapors are, not necessarily regulated, and those disposables put quite a bit of pressure on them. So people are maybe flocking towards those heat not burn cigarettes at less of a rate than they are towards those vapes, and that's kind of eating their lunch. I think within that context, they're still quite a decent company, but if you're looking for growth, perhaps it's maybe a bit unfeasible, a bit unrealistic to expect that from them going forward.
All right. Well, let us get to your stock picks, something that you may not be as cautious about.
Absolutely. So, it's not been the greatest start to the month, when it comes to offshore markets. We had a great start to the quarter, but given that the markets came off, it's given us a bit of opportunity maybe to get into some of our favorite companies, really. I didn't have to scratch my head too much for this one. One of my favorite companies, and I think generally speaking, your favorite analyst's favorite company is generally ASML. It's one of them sort of open secrets, I would say, not so secret at this point, but really they sit at the top of the semiconductor supply chain. I've got an iPhone. What makes it smart is the microchip within the phone. Taiwan Semiconductor is the company that makes that microchip, but they need machines from ASML to produce those microchips. And it's pretty much that case across the board. ASML is the only company that does this. They came off about 5-6% on the back of a weaker than expected order book last week. I was excited to see that. It gives me a chance to get more exposure for clients that don't have any. It's always a great opportunity to get some exposure to what is definitely one of the best companies in the world.
All right. Well, thank you so much for your insights and analysis today on what has been moving investors' money today. That was Muhammed Wagley from Sasfin Wealth.